Welcome back, everybody. Ready for another deep dive?
Absolutely. Always ready to dive in.
All right. Today, we're going deep on two really big intertwined topics:
Oh, yeah?
investing and budgeting.
Nice. Two sides of the same coin, really.
Exactly. And to do that, we're going to be pulling from two podcast scripts that you sent over.
Sounds good.
We're going to get through all of it, extract all those key insights,
Right.
and really give you the ultimate understanding of these topics. So are you ready?
I am. Let's do it.
All right. Let's kick things off with investing. I'll be honest with you, sometimes I feel like investing is just for those Wall Street guys.
Yeah?
Like the rest of us should just steer clear. What do you think?
No, not at all. Investing is really for anyone who just wants to see their money grow over time.
Okay, that makes sense.
It's not about getting rich quick. It's more about making smart choices that will benefit you later on down the road.
Gotcha. So if I'm thinking about investing, what's the biggest takeaway? What's the one thing I really need to remember?
Patience.
Patience.
Yeah, patience. This is definitely not a get-rich-quick scheme. In fact, one of your sources quotes Warren Buffett as saying, "If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes."
Wow. 10 years, that's a long time.
Yeah, it is.
Why is patience so important?
It all comes down to this incredible concept called compound interest.
Okay. Compound interest. I've heard of that, but don't really know what it is.
Einstein actually called compound interest the eighth wonder of the world.
Seriously?
Yeah, seriously. Basically, it means you earn interest on your interest.
So you make money on the money that you've already made.
Yeah. Think of it like a snowball rolling down a hill. The snowball gets bigger and bigger as it picks up more snow.
I get it.
So the longer the hill, the bigger the snowball gets. And in investing, that hill represents time.
Oh, okay. So that means the earlier I start, the better.
Exactly. The magic really starts to happen when you give your investments time to grow.
It sounds like time is the secret weapon of investing.
You got it.
This is all very interesting. But now I'm thinking about all the different ways to invest. You know, the sources you gave me mention things like stocks and bonds, mutual funds, ETFs. It's a lot.
Yeah,
It can be overwhelming to think about.
you can definitely feel that way. But don't worry, it's all about finding what's right for you and your financial goals. So let's break these down a bit.
Okay, yeah, let's do it.
So first, we have stocks.
Stocks, yeah.
Owning a stock is like owning a tiny slice of a company. You're essentially placing a bet on that company's success.
Oh, interesting. So if that company does well, the value of my stock goes up.
Yeah, exactly. Then we have bonds, which are more like loans.
Oh, okay.
So you're lending money to a company, or maybe even the government, and they promise to pay you back with interest.
So with stocks, you're hoping the value goes up, but with bonds, it's more about getting paid back that initial amount plus a little extra.
Yeah, exactly. You can think of bonds as providing a more steady return, while stocks offer the potential for higher growth, but they come with more risk.
That makes sense. So what about those mutual funds and ETF?
Ah, yes. They might sound complicated,
Yeah, a little bit.
but they actually make investing a lot simpler, especially if you're new to it all.
Okay.
Mutual funds are like a big group investment, right? So you pool your money with other investors and then buy a whole bunch of stocks or bonds together.
It's like splitting a giant pizza with a bunch of friends.
Exactly. You get a little slice of everything, which is great for diversifying your investment.
Diversification, yeah.
And then we have ETFs,
Okay.
which are similar to mutual funds. They also offer diversification, but they're traded on stock exchanges, like individual stocks, which means you've got more flexibility with them.
So it's like trading baseball cards on the playground.
Yeah, something like that. You can buy, sell, or trade them easily.
All right. So no matter which way I go, stocks, bonds, mutual funds, ETFs, it seems like diversification is really important.
Absolutely. You never want to put all your eggs in one basket. Actually, one of your sources quotes John Bogle, the founder of Vanguard. He said, "Don't look for the needle in the haystack. Just buy the haystack."
I love that. So simple, but it makes so much sense.
It does.
So let's talk about getting started. What are some practical steps I can take to start investing? Do I need a ton of money to begin?
No, not at all. You can start small.
Okay, good.
The key is to just stay consistent. Even investing a small amount regularly over time can make a big difference, thanks to that compound interest we talked about earlier.
So small amounts consistently over time.
Got it. Exactly.
Yeah.
One of your sources even talked about micro-investing, where you can start with just a few rands. And another great tool, especially for beginners, are robo-advisors.
Robo-advisors, what are those?
Think of them like your own personal AI financial advisor.
Oh, cool.
They use these algorithms to help build and manage an investment portfolio based on your goals and how much risk you're willing to take.
So if I'm comfortable with more risk, they might suggest more aggressive investments. And if I'm more cautious, they'd stick to safer options.
Exactly. It's all about finding the right strategy that aligns with your individual needs and comfort level.
This is making a lot more sense now. But I gotta be honest, the idea of risk still makes me a little nervous. What if I lose everything I invest?
That's totally understandable. Understanding your risk tolerance is super important, and it's different for everybody. Are you someone who's okay with those big swings in the market, or do you prefer a slower and steadier growth?
Knowing myself, I think I'm definitely more of a slow and steady kind of person. But what about timing the market? Is it possible to buy low and sell high to maximize my returns?
That's the million rand question, isn't it?
It is.
The truth is, predicting market fluctuations is like trying to predict the weather.
Oh no.
Even the experts get it wrong sometimes.
Really?
Yeah.
Yeah.
Actually, one of your sources quotes Burton Malkiel, who said, "Time in the market beats timing the market."
It's more about being patient and consistent than trying to outsmart the market.
Exactly. And just remember, if you ever need quick access to funds, that's where having an emergency fund really comes in handy. It's like your financial safety net.
Okay. So an emergency fund protects me from having to sell my investments at a loss if something unexpected happens.
You got it.
What about those dividends I keep hearing about? Are those just like a bonus or is there more to them?
Dividends are payments that companies make to their shareholders,
Okay.
and they can actually be a really powerful way to build wealth. Just imagine your money is making more money for you.
That's wild.
And if you choose to reinvest those dividends, it's like adding fuel to the fire of compound interest.
Now, that's an image that really sticks with me.
Yeah.
So we've talked a lot about investing, and I gotta say, it's a lot more complex than I initially thought.
It can be.
Before we move on to budgeting, is there anything else about managing risk that I need to keep in mind?
Yeah, you hit on a lot of great points. But remember, diversification, doing your research, and thinking long-term are key when it comes to managing risk.
Okay, great. This has been incredibly helpful, and I'm feeling a lot more confident about investing now.
Glad to hear it.
But let's switch gears a little bit now and talk about budgeting. Budgeting is the other half of the equation, right?
It is. It's all about managing the money you have wisely.
So where do we even begin with budgeting?
It all starts with knowing your numbers, both your income and your expenses.
Okay, so tracking my income is pretty straightforward. But when it comes to expenses, that's where things can get a little scary.
It can be. But remember, knowledge is power, right? You want to be aware of where your money is going. One of your sources had this great point from Vicki Robin. She talked about income as the life energy we trade for it.
Life energy, that's an interesting way to think about it.
It is. It's about realizing that your income represents your time, your effort, and your choices.
Makes sense. So tracking my expenses is important. But how do I do that in a way that doesn't feel overwhelming?
It's crucial to separate your fixed expenses, like your rent or car payment, from your variable expenses, which change each month, like groceries or entertainment.
Understanding the difference between those two is definitely a good place to start. But let's be honest, budgeting often feels like this big chore, like I'm restricting myself from actually enjoying life.
I hear you. But budgeting shouldn't feel like deprivation. It's really about making conscious choices so you can have both financial stability and enjoy life.
I like the sound of that. Okay, so what about all the different budgeting techniques I've heard about? There's the 50-30-20 rule, zero-based budgeting, the envelope system. It's a lot to take in.
It is, but let's break them down a bit, shall we? So first, the 50-30-20 rule. That one's pretty simple and a great place to start. You aim to allocate 50% of your income to your needs, 30% to your wants, and 20% to savings and debt repayment.
Okay, that's easy to visualize, like cutting up a pie chart for your money.
Yeah, exactly. Then we have zero-based budgeting, which is all about giving every dollar a specific job. It's about being super intentional with where your money goes.
Sounds like a great way to avoid overspending.
Exactly.
Yeah.
And then there's the envelope system, which is the old school method.
Yeah, the envelope system. I remember my grandma used to do that.
It's a classic, but it can still be effective. Basically, you set aside cash for different spending categories in separate envelopes.
That's really smart. You can literally see how much money you have left for each category.
Yeah, of course, in today's world, you can use cash, prepaid cards, or even budgeting apps with digital envelopes. It's all about finding what works best for you.
Okay, so we've got a decent understanding of some popular budgeting techniques. What are some practical tips for actually making these work in real life? I'm all about action here.
Don't try to change everything overnight. Start with small changes and focus on building good habits gradually.
So start small, focus on progress, not perfection.
Exactly. And remember, automating your savings can be a lifesaver. Set up those automatic transfers to your savings account every time you get paid.
That makes it so much easier. Any other tips to share?
Make sure to review and adjust your budget regularly. Life is constantly changing, and your budget should reflect that. And one more thing, don't forget to reward yourself.
Okay, yes. Budgeting shouldn't feel like a punishment.
Exactly.
All right. But we have to acknowledge that budgeting challenges are real, right?
Oh, definitely.
What are some common ones we should be aware of?
Impulse spending is a big one. It's those spur-of-the-moment purchases that can really mess up your budget.
Yeah, those get me all the time.
A good way to combat that is the 24-hour rule. So before you buy anything non-essential, give yourself a day to think it over.
That's really smart. I'm going to try that. What about staying motivated, though? It's easy to lose steam when you're not seeing those results right away.
It is. That's why it's crucial to remind yourself why you're doing this. What are your financial goals? What do you want to achieve? Keep that big picture in mind.
Oh, okay. Visualizing those goals can help stay on track. But what about those unexpected expenses that always seem to pop up at the worst possible time?
That's where your emergency fund comes in. It's your financial superhero, always there to save the day.
Love it. Okay, I'm feeling like I'm starting to build this solid financial superhero toolkit. We've got the budget, the investment plan, the emergency fund, and the mindset to keep learning and growing. What am I missing?
Don't forget the most important piece,
Right.
a clear understanding of your financial goals. What are you working towards? What does financial success look like for you?
That's a great point. It's so easy to get caught up in the how-to without really thinking about the why.
It's like setting out on a journey with no destination in mind.
All right, so before we even think about budgets and investments, we need to sit down and figure out what we want our money to help us achieve.
Exactly.
Okay, I can definitely do that. But sometimes, even with clear goals, it's still hard to stay motivated, especially when progress feels slow. Any tips?
Celebrate those wins, no matter how small they are. Did you stick to your budget for the month? Did you finally contribute to that investment account? Pat yourself on the back. Those small victories help you stay on track.
I like that. Focus on those positives. What else can help with staying motivated?
Sometimes having an accountability partner can be really helpful.
Oh, yeah.
Or even joining a community of like-minded individuals can provide support and keep you motivated.
It's like having your own financial cheer squad.
Exactly. But what about those times when we slip up and make a mistake? It's easy to beat ourselves up about it.
It is.
But setbacks are just a natural part of the journey. Don't let them derail you. Just learn from it and keep moving forward.
It's like learning to ride a bike, right?
Yeah.
You're going to wobble. We might fall a few times, but we get back up and keep practicing until we find our balance.
Exactly. The more you practice, the more confident you'll become.
Okay. I'm really liking this. We've talked about practical steps and strategies, but I feel like our sources didn't really touch on the emotional side of money. Is that something we should be thinking about?
Absolutely. Our emotions play a huge role in our financial decisions, whether we realize it or not. Our relationship with money can be shaped by how we were raised, past experiences, and even our personality.
That makes a lot of sense. I can see how budgeting might feel really restrictive to some people, but provide a sense of security for others.
Exactly. The key is to understand your emotional triggers and develop healthy coping mechanisms. Creating a budget that allows for some guilt-free spending or working with a financial therapist to address any anxieties you might have about money.
I hadn't thought of it like that, but it seems like taking care of our emotional well-being is just as important as learning those practical skills.
It is. Remember, we're talking about overall well-being here, not just dollars and cents.
This has been so insightful. I'm already feeling more empowered to take control of my finances.
Glad to hear that.
But before we wrap things up, I want to go back to that idea from Robert Kiyosaki, the one about investing in time. It's such a powerful concept, but it can feel a bit abstract.
Yeah, it can.
How do we actually put that into practice?
It's about making choices that truly align with your values and prioritizing your long-term well-being.
Okay.
Saying yes to those experiences that nourish you, saying no to the things that drain your energy, and making time for those activities that bring you joy and help you grow.
It's about creating a life that's rich in every way, not just financially. But I think it's time for a quick recap before we go any further.
Yeah, let's do it.
We've covered so much today, from the basics of investing and budgeting to defining those financial goals, understanding risk, building that emergency fund, and celebrating those wins along the way. Anything else?
And don't forget, we learned that investing and budgeting are really about making conscious choices that align with your values and support your well-being for the long haul.
So it's about investing in ourselves, both financially and personally.
Exactly. And remember, there's no better time than now to start investing in yourself. Those small actions you take consistently can compound over time, leading to some pretty remarkable results.
This has been an amazing deep dive into personal finance. I feel like I've learned so much. But before we say goodbye, I want to leave our listeners with a thought-provoking question to ponder. Thinking back to everything we've talked about, what is one small step you can take today to improve your finances? It could be anything, like finally creating that budget or maybe doing some research on different investment options.
Yeah, or even just sitting down and having a conversation with yourself about what your financial goals really are.
Exactly. It's all about taking that first step and starting to build some momentum towards a better financial future.
You got it. Small steps lead to big changes.
I love that. And on that note, we'll leave you with that powerful quote from Robert Kiyosaki one last time. The rich invest in time, the poor invest in money. Let that be your guiding principle as you navigate your financial journey.
It's a great reminder that time is your most valuable asset.
Absolutely. So invest your time wisely, make choices that align with your values, and just watch your wealth grow, both financially and personally. Until next time, happy investing and budgeting. Thinking back on everything we've discussed, what's one small step you can take today to improve your finances? It could be anything from finally creating a budget to researching different investment options or even just having an honest conversation with yourself about your financial
It's
goals.
all about taking that first step and starting to build momentum towards a brighter financial future.
I love that. And on that note, we'll leave you with that powerful quote from Robert Kiyosaki one last time. The rich invest in time, the poor invest in money. Let that be your guiding principle as you navigate your financial journey.
It's a great reminder that our time is our most valuable asset.
Absolutely. So invest your time wisely. Make choices that align with your values and watch your wealth grow, both financially and personally. Until next time, happy investing and budgeting.